Welcome to the Nexus Point, a podcast for next-gen accounting firms. Here's your host, Geoff Bruskin.
Welcome back to the Nexus Point Podcast. As always, my name is Rich, and today we're with Managing Partner and CEO of White Tiger Connections, Geoff Bruskin. How you doing today?
Doing great, Rich. How about you?
I'm doing all right. We're closing out the new year strong and heading into 2026, ready to go. So that's fun. That's fun. And we're just going to jump right into it here. So you and I both talk to a lot of CPA firms and wealth management firms. It feels like everyone right now is talking about integration. But when you kind of peel that back, there's a lot of confusion around, what that actually means, what it looks like, how it's done, and, really most importantly, how it actually works. So today, we're going to, unpack the options for firms that we see go right, where it maybe goes wrong, and how firms can think about this integration more intentionally. And to jump right into it, big picture wise, when a wealth management firm starts thinking about integration and adding in tax and accounting services or that arm of their firm, what options are really on the table for them?
Well, for wealth management firms, I would say the following options exist. For those of those of you who are interested in the CPA thesis, there is buying an accounting firm, there is building one from within, and then there is kind of the elusive joint venture. The joint venture is the kind of most smoke and no fire, the hardest to actualize in reality, maybe the easiest in the ideal scenario. And then the only other fourth option might be a merger. So again, we have buying a firm, building a firm, merging with a firm, and then the joint venture, which is the hardest to do.
Gotcha. So, and what I find interesting is I feel like in your conversations, you probably see this too. Most of the time I feel like the other side of the conversation really feels like there's only one or two options when really there's a range of structures. And I think a part of our job is helping them understand that and how, big pictures can really align. So going a little bit further, when we look at, RIAs, broker-dealer firms, or like that hybrid model of firm, how do you think about that strategy differently across those structures of the firm?
Sure. So broker-dealers have probably the most difficult time from a compliance standpoint in bringing CPA capabilities into their firm. So you've got the separation of church and state where the BD can't give tax advice. That's true, I think, 100% of the time, regardless of who you broker-dealer with. And so you can't hire, you can't kind of keep, things simple. But really the truth, Rich, is that the same options exist for a broker dealer as actually exists for an RIA, just with a little bit of a different straw man sort of approach. And so I'm not an attorney, but I've seen it executed several times before, successfully clearing the compliance departments of BDs, where a broker dealer can buy whether it's an existing CPA firm and then run and operate that separately. And that's kind of what's most common, Rich, in the profession. The most significant way it happens regularly is you buy a firm. The problem is that there are not a lot of competent CPA firms out there for sale. Most of the CPA firm inventory, Rich, that's on the market today, as we see regularly, is on the market because they lack capacity internally. So the wealth management firms want to buy or build CPA firm functionalities, obviously, for at least two reasons, one of which is they want to serve their clients with competent tax, accounting, bill pay, those sort of solutions that CPA firms produce. But they also want to have a passive referral stream through which they can cross-sell financial services, wealth management, planning, insurance, the typical services that broker-dealers provide, and RIAs for that matter. So the typical thing to do is to buy it, but the inventory isn't always there. If you're going to buy a firm and they can't even serve their own clients with competent tax services, how are they ever going to serve your clients? And if they're not serving their clients with competent tax services, you can bet that the client base won't be receptive to you selling your services as a wealth management firm into them. So in lieu of that, just simply buying is not always on the table, whether you are an RIA or broker dealer. And so if you're a BD, you can buy a shell. You can buy, a third party entity that my firm can create these. We've done that for clients previously. You can have someone in your, on your executive team create an LLC, and that entity can be staffed. Now, the tricky thing here is that, number one, a shell does not necessarily come with clients, of course. It's also not going to come with all of the other things. There's kind of this philosophical concept of seamlessness, which unfortunately doesn't exist, where the wealth management firm is going to buy a CPA firm, and the tech is going to be in place, the workflows are going to be in place, the malpractice insurance is going to be in place, the talent and the capacity to deliver for clients confidently is going to be in place. It usually does not look like that. Usually the systems are broken, the pricing is strange, the workflows are incomplete, the talent situation is the most significant problem. But it is surmountable. It's surmountable to do this. It's just not simple. So whether you're buying a firm and then you have to create some overhaul, something that we help with, or you're buying a shell, or if you're an RIA, you can simply hire from within CPA talent and build it from scratch. The compliance barriers are navigable, and you're going to have to solve for corporate recruiting infrastructure, intelligent technology and workflow, those expertise, and those systems like talent acquisition, for example, Rich, those are not embedded in the CPA firms that are largely on market or off market deals today. So the long story short is this is not for the faint of heart. It does require investment by, mostly time, even more than capital of the wealth management firm. A lot of what we do in a consulting capacity is kind of the strategy and the tactical management as a done-for-you service for the wealth management firm, so that they can continue focusing on what they do best and have the assurance that we can serve as kind of fractional CEO sort of folks who are subject matter experts in the strategic aspects of integrating the CPA firm and all of the different ways that we've discussed with the wealth management firm. The last thing I'll say is, why is the joint venture so hard? And sorry if I'm jumping the gun and you're going to get to this later. I'm sure that every wealth management firm listening to this video has tried to develop a referral stream, a relationship with CPAs. And just what happens, seemingly time and again, is that there is a lot of smoke and no fire. And so what that means is that CPA says, oh, I'll send you clients, you can send me clients. But when it comes to you sending them clients, oftentimes they're dropping the ball. And the reason for that is because they are so incredibly inundated with the work that they have on their plate already. Now you're sending them business. As crazy as that sounds, it's a more kind of tactically rich delivery process, less lucrative than the financial services that you all offer. And the other thing is, they're not sending you referrals. And so the business development aspect of the partnership, which is intuitive on paper, but very hard to carry out in reality, this is something that we see constantly. And so it's not that the joint venture can't work. It's just that there's not really a way other than maybe nepotism or luck of stumbling your way into it. There's not really a reason, given all of the circumstantial context of the profession, why we at least can facilitate those successfully. And we have tried.
No, it makes a lot of sense. I'm really glad you touched on like a lot of the nuances and barriers to a lot of this, a lot of what the challenges are in trying to, fulfill this goal. But what you also did touch on, and I'm glad that you did, is that with any large project, a lot of these things are surmountable for and they can be accounted for, and then you can still keep working towards that goal. It just, like you said, takes a little bit of time, some trust, and the willingness to keep going forward in that goal. But it really, that's where like a lot of these things can start to gain momentum, and it's just about, getting that ball rolling. And if we can go like another, slightly layer deep, just as far as like what the wealth management firms or RIAs, broker dealers, what they all might be focused on, say if it's like, how do you think about strategy? If it's more insurance, focused, or if it's estate planning driven, or, purely like a financial planning and advisory sort of thing. Can you just touch on that a little bit for me too, just so we can kind of go one layer more deep so we can really kind of cover our bases here?
Yeah, sure. So I think, all RIAs and BDs kind of have different makeups, right? Fee-based versus commission-based. Some sell insurance, some don't. Some are, there are plenty of firms we work with that are exclusively planning and that don't do wealth management, or vice versa. And the reality is that you, as the wealth management firm partner or owner or key man, you are the most equipped to kind of know what your clients are asking for. And so where we operate best is we meet you where you're at. And so if you have an idea about kind of what the utopian scenario is, like we want to have just tax. We don't need bookkeeping. We don't need bill pay. We don't need planning. We just need filing, compliance, that kind of thing. Great. We can work with you to come up with all of the options that exist, a laundry list of them, and then by process of elimination, come up with the one that's going to be the most intuitive for you based on your budget, your timeline, the risk associated with it, whether legally or just from like initiative failure standpoint. We don't want that. So we map it in the beginning and make sure it doesn't happen. The same is true as, let's say, a lot of our RIAs and BDs, they work with ultra high net worth individuals and multifamily, single family offices that are extremely wealthy, sometimes multifamily that are very wealthy. And in these cases, bill pay is something that's extremely attractive. Tax advisory is something that's also attractive. Tax advisory meaning not only tax planning in the context of the specific sheltering vehicles that a wealth management firm has at its disposal, but broader kind of the entire tax paradigm that a client is facing. Like, maybe you don't do real estate as a wealth management firm, but the client might own, X hundreds of millions in real estate assets, and they go through serial 1031 exchanges and cross-border transactions. And there are tax things that far exceed the direct products that you're offering. And so the planning that you offer might be focused on your products, but in a broader context, there might be tax advisory work. And the wealthier the clients are that you work with, the more likely it is that those clients would love to have an integrated solution where they can bank on you for liquid and even complex strategies, but there's going to be a tax solution, a bill pay solution, a kind of a robustness of the offering that's going to highly differentiate you from your competitors and make it so that the accounting firms that are, you're trying to partner with, that your clients are working with, they're not responding to their emails during tax seasons. They can't address fire drills. The CPA profession is under duress right now because of how much demand there is and how there's not enough supply, certainly competent supply. So if you can own that, that differentiates you tremendously. And I think there's always a little bit of a different intuitive strategy. And so, Rich, to answer your question directly, I would say, our clients know what it is that they want to accomplish. We help them list out all of the ways that it's possible, and then by process of elimination, back into the one that's the most intuitive for them.
Yeah, and I mean, I think it goes just to like touch more on what you were saying too. Like, I think it goes a long way when you meet people where they are, because again, we understand how big this challenge can seem, but when you start to work with the right people and people who are truly willing to understand you, and it's not just about transactions, I feel like that's like where you're coming in and you're being able to like pinpoint all of these things. You keep the level head of the situation, and you're able to kind of navigate this situation very, very well. And just kind of moving forward with our conversation, there's two more points that I want to kind of touch on. Let's say a firm maybe doesn't want to do this internally, but they're also very, very cautious of the joint venture models that you were talking about earlier. Are there options for them? What alternatives do they have? Like, where can they go to still, do this integration thing that everybody has their eyes on?
It's a great question. The joint venture, as you alluded to, Rich, is the most attractive for I would say, highest volume of wealth management firms, because it doesn't mean that you need to own the asset or own the risk. You get to enjoy the benefits of an integrated experience. An integrated experience, right? It's not fully integrated if you don't own the experience, but maybe it's enough to give your clients what they're asking for, without you needing to become a subject matter expert in running an accounting firm. And a lot of wealth management firms that we talk to are very happy with their depth of expertise in wealth or planning, and have no interest at all. And it's hard to blame them when you see how, I think, objectively more difficult it is to run the CPA firm than it is to run a wealth management firm. Not that the latter is easy either. But there's so many more nuts and bolts to the administrative process, the preparatory process, the compliance process, the talent issues. It bills less attractively. The enterprise value is less attractive. There's a lot of things about the CPA profession that justify wealth management firms' trepidation from entering into it. With that said, because the joint venture is so hard, because there is so much smoke and no fire, there is not really any way of doing it. And this is maybe the bad news, but it's sober bad news that hopefully will help you as a wealth management firm move forward entirely if you don't want to participate in owning the locus of delivery of control. So what does that mean? I mean, you can acquire, you can build it, or you can merge. Those are the other options. So a merger with a CPA firm is one way that you can kind of gain enough authority in the relationship between the tax delivery, for example, and the wealth delivery ecosystem that you're providing, where you can help to shape what the client experience actually looks like. Obviously, if you acquire, you own the locus, and you can use a consultant like us and a recruiter like us and a business broker and advisor of M&A transactions like us to help navigate that effectively. If you want to build it from within, that's actually, Rich, as we're seeing, right, a rising trend of especially under $1 billion, $2 billion in AUM, less risk, more reward. It's less sexy from the standpoint of like, hey, you're not getting a client list of 1,000 clients that you can just seamlessly cross-market your services to. But that's, as we discussed earlier, a little bit of a pipe dream. It doesn't always work that way, because the reason you acquire those clients is because that firm lacks capacity to begin with, and you have to solve for that capacity to begin with. On the other hand, if you're hiring and building the function from within, whether as an RIA or as a BD through the shell structure, you have the opportunity as a wealth management firm to set up optimal workflows, optimal tech paradigm, which a lot of the optimal client billing paradigm, it kind of purpose built and integrated with that core offering that's more lucrative of wealth and planning and even insurance, right? And once you've built this, even a shadow of what it is, the ability to become, say, one CPA, $150,000, $250,000, $100,000 price point of their annual salary. It depends on what the solution is that you're exactly looking to provide. Then it actually becomes easier to then acquire firms into your paradigm, because a lot of what the CPA firms, Rich, and we see this, are looking for on the market today is they're looking to join with someone who has it figured out, because they don't. They don't have workflows figured out, tech figured out, client billing figured out, certainly not staffing figured out the vast majority of the time. If they do, they're being gobbled up left and right by private equity firms, which wealth management firms, you're seeing, a tremendous iteration of that in your own profession. It is reaching fever pitch in the CPA world as well. And so if you want to compete, know what you're doing first by building it internally. This is something we're seeing a lot of success with, and we can help pro forma, and we do this regularly with firms to see how long they're going to be in the red, what the rate of cross-selling is going to be. And it's an increasingly effective model because of the lack of good inventory that's on the market from an acquisition perspective. But the merger is not something that we should throw out either. Obviously, the relationship has to be pretty profoundly awesome in order to evaluate it. And so something we're doing a lot of is wealth management firm has a CPA firm that they have some kind of pseudo joint venture relationship that's actually working well. That's one of those maybe lucky and anomalous scenarios. And we're helping to create a situation where the whole is greater than the sum of its parts for all parties. And that's not an easy thing to do. It's something that requires nuance. And that's some of what you were alluding to earlier. So acquire, merge, hire. Those are the ways of doing it if you do not want to, go the joint venture. Just try to get lucky with the joint venture route.
Yeah, it makes a lot of sense. And again, you've been sprinkling a little bit more of like, because I know that, your expertise and your knowledge of this goes way beyond just this specific topic. So the next thing I kind of want to move into is just like a little bit about perception for yourself as like a recruiter and like a business broker and things like that, because oftentimes I think most people come into those conversations viewing you simply as a person who will source things and opportunities and make introductions and things like that. But it's way more strategic. It's way more layers deep than that. So if you can just talk to me more, like I say, you've been sprinkling it in, but talk to me more about what White Tiger Connections does, what you do, and what your team can do as far as other ways that they provide, services to wealth management firms in this space right now.
Sure. So the sourcing is big. That's what the world of business brokers are known for sourcing. And unfortunately, Rich, it's a very transactional industry. Brokers have earned a bad reputation. We operate a little bit differently. We are highly, highly consultative. Brokerage in the form of sourcing is not the primary thing we do. It's something that's necessary because we have to produce inventory in order to make excellent outcomes occur. But the inventory is kind of the byproduct. The necessary evil, the sourcing is it's the consultative stuff that's the most valuable. So a lot of what we've been doing recently, and Rich, you're partnering me with me on this, which is great. Is we're working with parties that I alluded to earlier who already have identified the consummate party that they would love to figure out a way to make something happen with. It's just, how do we do it? A lot of times what we see in the CPA profession, there's this really interesting nuance where the no action scenario is a lot more attractive to them than merging or being acquired by a wealth management firm. And wealth management firms, you can understand this from your perspective. You've got private equity beating down your door. And if you haven't accepted the big check yet, it's probably because there are cultural dynamics that you guys don't want to lose, which is maybe the most profound. And those directly implicate the client service dynamics. And there's also a vision that you might have for what this thing could become. And maybe private equity is, antithetically not helpful to that. Maybe it could help you get there faster, but maybe fast isn't the right way to do it. Maybe right is the right way to do it. This is a lot of what we hear when we talk to wealth management firms. CPA firms, it's a little bit of a different nuance. It has more to do with and it still has to do with control and culture. And those are really key things. It often, when the rubber meets the road at the 11th hour and we really get down to, in culturally synergistic scenarios, everything seems like it's right. Where we get stuck is in the pro forma. How does the pro forma, the financial pro forma that is for the younger CPA who is not imminently looking to retire, which obviously you as a wealth management firm don't want somebody who's just on their way out of the profession. You've got to then backfill for that person, not to say you can't do it, but it's harder. And so for the younger person who is more entrepreneurial in the space, the no action scenario of them taking advantage of this unique moment, whereas there is all of this demand and not enough supply of the service that they provide, we have to create an outcome where they're able to participate in the gains that incentivize you as the wealth management firm to be interested in this thesis to begin with. And that has to do with the wealth management business that's coming into the room because the CPA firm, now has that tax offering, which from a net new business development in the market standpoint, all of this gravity is, coming into the CPA firm, and then that can flow through into the wealth firm. It's also something that has, not necessarily a lot of monetizable value to your client base as a wealth management firm, because the service matrix is, the cost is, not that much, meaning the profit is not that much on the tax business, especially. But when it comes to client retention and when it comes to the infrastructural development of the wealth management firm, you will know this is very attractive to think about adding the offering. So it's a lot of, burden for the CPA firm to take on, to think about kind of explosive growth in the context of a merger or an acquisition, and not a lot of reward if it's only in the vacuum of the firm itself. So it's surmountable, one, that should be clear as we're talking here, but two, maybe the more important thing is that it's just a bit nuanced, because it's not even that one dimensional. You get back into culture, we get back into control, we get into trajectory and pro forma, and we have to make sure the CPA understands that all of the volume and the growth that we're talking about is not going to rest on their shoulders. And in this world of talent crisis of this profession, it's very easy for the CPA to be able to see the forest through the trees, but only because they're looking at each tree individually. And we have to pull them out of it. We have to put them into more of an executive position, and that means corporate recruiting infrastructure, technology innovation, the understanding of the remote workforce dynamic. There is not a talent crisis, is what we believe in the accounting profession. Once you unlever geography, that's something that we talk about quite a lot as a firm. So the remote thing in this blue chip profession of accounting is hard for a lot of folks to swallow, but for those who can, there's a lot in that ability to capture the growth. And so put all of these things in a big stew and then combine it with the relationship development that is really necessary to build that trust. That's a lot of the consulting work that we're doing to help thread the needle between the wealth and the CPA firms. They already know each other, not only when we're bringing parties to the table.
Well, I appreciate you, you going through all of that and, really giving us the full seasoning of what you guys are able to do. And yeah, I think that's a really good place for us to end, because what we've talked about today, it's not just about structure or model or anything like that. It's really about intentional growth. And, whether you're a firm who's thinking about this, explored it, maybe has run into, some of those barriers because of the nuance, there is a solution out there for you. It's just about navigating all the roads down it to get there. And as always, if this conversation brings up any questions or you'd like to connect with us deeper, we're always available, and we'd love to continue the conversation and go into more details with you all. But thanks for joining us, and we will see you next time.
See you next time. Thanks.
Thanks for listening to The Nexus Point, a podcast for next-gen accounting firms. If you enjoyed this episode, don't forget to subscribe and share this podcast with your friends. See you on the next one.